Hello, Zinger Nation. This is Justin Roberti. How is everyone today? Thank you so much for joining us. We have joining us today Dyma Budorin, who is the CEO and co-founder of Hacken, which is a Web3 security company. We're going to be talking a little bit about security on blockchain at this point. One thing I wanted to share with you before we begin, I thought that this was pretty cool. There's a report that came out that was sponsored by DARPA a little while ago. It was done by Trail of Bits, is the name, the unlikely name of the source, the people who did this this research. And as they put it, over the past year, Trail of Bits was engaged by the Defense Advanced Research Projects Agency, DARPA. You probably all know it from giving us a little thing called the internet, as opposed to Al Gore. It was in fact DARPA. Al Gore never actually really said that, by the way. He said something much more sane sounding, just so you know. That's a little bit of an urban legend. But anyway, is engaged by DARPA to examine the fundamental properties of blockchains and cybersecurity risks associated with them. And what I thought was really kind of interesting that I thought I would show you here is the idea that there are all these areas of centrality, of unintended centralization. Authoritative centrality, which is the number of entities needed to disrupt the system. Consensus centrality, motivational centrality, how participants are disincentivized from acting maliciously. To what extent are these incentives centrally controlled? I mean, kind of what a topological centrality, how resistant is the consensus network to disruption. Network centrality, are the nodes sufficiently geographically dispersed such that they're uniformly distributed across the internet? I suppose, for one thing, to guard against natural disasters. And software centrality, to what extent is the safety of the DLT, which is the distributed ledger technology, dependent on the security of the software on which it runs? It's actually a very cool report. I'll drop a link in the discussion over the side. And they have a lot of interesting things to share. One thing that I thought was really kind of cool is they use this thing called the Nakamoto coefficient, which goes to show, based on the number of whales within the network, the amount of control that certain key parties have. It's like how many of those key parties would have to be subverted or controlled in some way in order to gain a controlling stake of the network. That's what this coefficient addresses, essentially. And pretty interesting. I mean, aside from the fact that that's an ugly little graphic I'm throwing over my face there, but I mean, take a look at it, man. Like Polygon has a Nakamoto coefficient of 2. Like, essentially, if two major parties got taken over, who were majority holders, Terra's on there, but of course that's gone up. Or is it? Solana 19, Avalanche 25. You kind of see the problem. It's like, not all things are, just because it's blockchain doesn't mean that's automatically decentralized. For one thing that's been pretty sus for me is certainly all the money that's come into the space from institutional investors is not a decentralized thing. But the point that they're making here is that, I can say that there's, millions of coins across my network and all these nodes and so forth. But if I can get a consensus just by controlling 4, you've still got a system that's easier to conquer. It's worth taking a look at. I would definitely take a look. In the meantime, let's go ahead and bring Dyma on, and we'll see if this works out. We're having a little bit of audio trouble before. Let's see how this is going. Hi, Dyma. How are you?
Hey, can you hear me?
All right. You don't know. I'm literally thrilled to the sound of your voice, Dyma, because as you were speaking, I'm like, and hopefully I can hear you, and I can. So that's good, because I was ready to just go ahead and riff off this DARPA paper the entire half an hour, but now I don't have to. So that's good.
I can think of comment on this on the DARPA papers. So.
Yeah, I know. You are not going to comment on it. That's why I did. That's what I do. I understand I had thrown something at you at the last minute. It is up to me to comment with a sophomoric understanding of things. That's my job. Now you. By the way, is it Dyma or Dyma?
Dyma.
Dyma. I just want to get it right. I don't want to say the wrong name the whole time. So Dyma. I understand that you are specifically a Web3, or you founded and are leading a Web3 security company. What are the specific challenges of Web3 security? It's kind of gotten to be a ubiquitous name. It's taken the place of blockchain in a lot of ways in terms of blanket terms. What are the challenges?
I would say that the market is still immature, and that still people don't understand all the risks associated. The community, the investors, they don't understand all the risks associated with blockchain projects. And right now, the smart contract audit is more like a marketing instrument, while companies are getting this audit report in order to cover their to get someone to think that they are audited and that everything is good with their code. And in fact, the smart contract audit cannot even be called an audit. It's a small security assessment over just a code deployed, and sometimes not even deployed. We made a research that out of 1,500 projects, top project at CoinGecko, only 30% of the uploaded code is the same that the one was audited. So the big problem of our industry is lack of accountability over all these projects and all the security risks and how they mitigated them.
Right.
So there is still a long way for maturity, and these challenges, they are quite exciting for us as security companies in Web3.
Okay, and of course, what about the comment made by Vitalik Budorin in reference to having to be careful of third-party platforms, such as a couple of specific NFT hacks, a couple of Bored Ape hacks that were in reality based on a weakness within Discord, if I'm not mistaken. It seems like the immutability of blockchain is not necessarily proof against human behavior when it is human behavior or other platforms that you might intersect with for the sake of marketing or what have you.
When you are referring to a blockchain, like vulnerabilities, you're referring to usually to the smart contract code which is deployed on the blockchain. But before a user get to work with this code, he usually goes through the layer of the dApp, layer of application security, layer of iOS security where this dApp is built, layer of user security on how he gets logged into this dApp and how he is managing his private keys and the access to them. So there are a lot of weak spots where a user can be hacked. So when something is happening, like with the user losing his NFT in the Discord, it usually has nothing to do with the Ethereum blockchain or some other blockchain. It usually has to do with how the user was using his computer and how he got some third-party applications get access to his MetaMask, or how his third-party application got the access to his sorry, one second.
Oh, okay.
Yeah,
Let me know. We've got down here now with your hand coming at the screen. Go ahead.
Yeah, access to his Twitter account and to his NFT profile picture. So, the blockchain is the smart contracts. If you use them right, they are secure. But it's not. I'm not expecting that the mass adoption will come with current level of infrastructure and complexity that are that are associated with using the private keys and mnemonic phrases. So a lot of things has to change.
Okay, where do we begin? I mean, because the thing is, we have in our own way the blockchain community, the Web3 community has tried to replace so many traditional modalities with blockchain-led, with lots of keyword, trustless interactions, for example, which I always thought was one of the funniest euphemisms that we use. But nonetheless, we can't really get away from the human element, can we? I mean, and would that really be better to necessarily do? Like, I guess it's more of a philosophical question, but I would imagine that is it fair to say that the majority of the weakness that exists within the system is because even if we change the technology, we're not changing user error as a factor?
Look, I don't believe that user will ever change.
Yeah.
With the Web3, the user will, if it doesn't, if it stays like this, we will keep seeing more and more hacks, more and more user hacks, more and more people losing their access to the wallets and stuff like this. So,
right.
In my opinion, if we want Web3 mass adoption, we need a middleman who helps user to store their private keys. And so there are already examples how this big, very popular wallets, they are approaching this problem. And I don't think that the next 1 billion of users will even know that Web3 has something to do with private keys and mnemonic phrases. They'll be automatically stored in one click in their iCloud, or they will have the wallet that will back up his private key with some password, one-time password, which is again stored somewhere in the iCloud. And user, if he loses his phone, he will just have to go to iCloud or wherever cloud or other service, and the service will restore him with certain 3 factors: his phone, his email, his Google OAuth, the things that he's used to, and he will not even remember that he had to do something with this with the private key.
Yeah. Sure, we need to make a more seamless experience for the user. It's true. I was going to protest. Of course, the user will change. They'll become more entitled and lazier. That's what we found, right? More demanding, at least.
Yeah. There are, in my opinion, there are much more bigger problems in the blockchain security space rather than the user security. I think, in particular, user security is already almost solved. This question is almost solved.
Okay.
Once again, we already seen so many amazing wallets, and their level of their security is pretty good.
So what what threat bothers you the most? What do you regard as the emerging threat in this space?
It's more associated with the with untransparency and unaccountability of the big crypto projects.
Okay.
I'm not even talking about certain Ponzi schemes like Terra Luna or whatever. I'm even talking I'm speaking even about centralized exchanges. The fact that we don't know what are liabilities and assets held on behalf of the clients of publicly listed Coinbase exchange, it like kind of drives me crazy, you know. And what can we talk about other centralized exchanges that I don't know, been hacked for hundreds of millions of dollars, and nobody knows what are their assets, crypto assets, what are their liabilities, and there is absolutely no auditors who are checking this. So we are in the middle of the situation when there are banks who are so hardly regulated to like maintain their capital ratios in order, you know, not to get into insolvency problems. And at the same time, we have absolutely huge number of black boxes of centralized exchanges where they can go and become next Quadriga CX like in one day. You know, and this is just one small example. We can continue describing more examples on how dangerous still our industry is.
Well, tell me about what the dangers are. You're talking about danger to the of trust in the industry overall. You know, coins losing valuation, people losing trust in the technology. Is that the danger you're referring to?
No, the danger is about the users losing money because of bad actors, and because they give to centralized exchanges or to other services their private keys, and these services, these platforms, they are not accountable to anyone, and nobody knows what is happening there. And if something happens, there will be billions of lost, billions of dollars will be lost, and we cannot do anything about it. And there is so big unfair competition because of that, and there's so many scams because of that, and we operate in very unsustainable industry, unfortunately, so far.
Right. Well, sure. I mean, if you go back 5 years, there was a lot more resistance to regulation. At this point, I speak to more people from the industry that are in favor of clear regulation, and that's what would really address what you're talking about. So, you know, to create standards to have everybody adhere to. What kind of standards are you? You said something about the code that they're showing for auditing. You know, vast majority of the code being used is not audited. Often the code that they use that they're auditing is not the same code being used. You know, what do you think would be a reasonable measure to create the level of transparency that you're looking for?
Sure. So first of all, I don't believe in regulation that will come outside from the industry. So regulation for sure needs to be built by the like industry players who understand all the risks, and like uh, Hacken and me personally, we are involved in certain alliances. For example, Enterprise Ethereum Alliance is doing a lot of very important work in creating the standards. There are, if we talk about cybersecurity, you know, like you should start with creating, you know, a list of things that every project has to do in order to like receive the standard of approval, like ISO certificate, and it should not be like a mandatory. It should start from recommendation, so that the projects are not pushed to do all the needed security tests and security assessments, but they like kind of willing to do it because it's a good, you know, for their community, good for their security, and that the market will demand it. So if we talk about the cybersecurity things that needs to be done, of course, it's a lot of things about the like penetration tests, bug bounty, the platform, the code review, the smart contract audits, all the bridges involved, all the routers involved, and things like that. But more than that, I think what is currently very important is that we, for all the token projects, we start to do assessments over the supply.
Mm-hmm.
So right now, if we have very good connections with CoinMarketCap, with CoinGecko, and they are ranked based on the price multiplied by circulation supply. And when you ask our friends from CoinGecko, CoinMarketCap, guys, it's such a huge work to verify circulation supply of crypto projects,
Right.
especially when you have so many bridges, and how you do it. And they say, sorry, but like we just look at if it's reasonable or not, and if it's reasonable, we keep it.
Sure.
So, and in fact, with all the bridges that is happening, we cannot be sure that the token projects are not inflating their supply, are not printing more than total supply,
Right.
and there is nowhere to to have a proper picture if it's already fraudulent activity. And more than that, we believe that circulation supply and total supply needs to be transparent and needs to be properly disclosed to the public, to the investors community, and there should be a third-party assessment over this disclosure. And supply analytics, total supply analytics, circulation supply analytics is basically the key financial statement to make an investment decision. And when investors want to invest in this and that token, they need to know who are the whales, do they have vestings, when are these vestings, what is the vesting schedule, what is going to be inflation rate for the next year, and things like that. And before we don't have this, proper requirements for projects to make a disclosure and to make and to have third-party assessment over their supply, we will see a lot of rug pulls, we will see a lot of exit scams, we will see a lot of team tokens dumped on the token holders, and without this, our industry will keep being a wild west, and big capital, big money will never enter our industry.
Right.
Sorry for
So certainly, having certain standards that all projects are living up to would be a benefit to the whole industry. It's been suggested as being part of the problem, one of many parts of the problem relating to the bear market that's happening right now. Where is Hacken's focus? You said that you are verifying some of the technical infrastructure projects that are reviewed in like CoinMarketCap. You work with CoinMarketCap. What else are you focused on these days?
During the bear market in 2018-29, begin 2020, we decided to focus on winning cryptocurrency exchanges security market. At the moment, we out of top 50 cryptocurrency exchanges, we're working with 26, and during starting from 2021, the late 2021, we decided to focus on the top 1,500 crypto projects, and we started to do a big research over the security landscape and to show to crypto world who is doing what in for their security, and we already have a security ranking of these top projects. And our next focus is to make a big research over their supplies, and we want to reveal the we want to audit, review the supply of, we're actually already doing it, of 1,500 projects, and to reveal all the problems, all inconsistencies between the current supply and the tokenomics that were published in the white papers.
Right.
And we want to show what are the benchmarks. We want to calculate the inflation rates of all these projects and to reveal it to the public. And we want the bad actors to not be publicly shamed, but like to change the way they operate and push them to be more fair, more transparent, and more accountable. And this is the area of our research. If you talk about the area of our R&D in terms of product development, this is another question. I can continue.
Okay. So essentially, you are working with projects to verify the veracity of their claims about supply, for the most part, about supply.
Yeah, this is something that is being discussed a lot by between security companies, between data analytic companies. It's time to start like revealing the supplies of the projects and start labeling it properly and start disclosing it to the public. It's during this bull run, we will get a lot of on-chain data available to the public.
Very interesting. I mean, obviously there's a big backlash when you find out that an exchange, for example, is doing wash trading, or an NFT marketplace is doing, some of the equivalent of wash trading, essentially to inflate their numbers. You're raising the point that people could just be misreporting from the very beginning. It's even a more fundamental discrepancy than if people are making up transactions.
Yeah. Wash trading was like a problem like maybe 3-4 years ago.
Well, it's still a problem though. I mean, people are still doing it. Certainly, there are several stories about NFTs this year. People are not fond of anything that feels like deception. But where should people look for more about Hacken?
About Hacken?
Yeah. If we want to find out more about you, I know that you are on Twitter. It is Hacking Club, at Hacking Club on Twitter. Where else should they check for updates?
We have the blog at our Hackin.io website. Yeah, you can subscribe also to my Twitter. It's Buda Kiev. Yeah. So yeah. But Twitter, the main Twitter, of course, is very good. And right now we are also making a lot of efforts to create certain researches, on-chain researches on CER.live. This is our cyber Web3 security ranking website, where we have ranking of cryptocurrency exchanges and, like I said, 1,500 projects over their cybersecurity. Before you make a decision to invest in this or that project, it's a good idea to check its security at this website. And right now, it's the biggest database of all security information of the crypto projects.
What's that URL again?
CER.live.
.live. DER.live.
CER.
Okay.
CER.live.
Okay. All right. Well, that is very, very cool. Thank you for so much for coming on and speaking with us today. And we will go ahead and everyone, please go ahead and follow Dyma, follow Hackin on Twitter. Check out the website as well, which is hacken.io. And thank you. We very much appreciate your time today.
Thank you. Thank you for
All
having
right,
me.
take care. Bye.
Bye-bye.
All right, everyone. You know, if you've hung in with me today, then that makes you very special people, and I appreciate that. I appreciate all of you. I really do. You know, if you get a chance, I said I was going to drop the link, and since my chat is absolutely lonely today, I will just go ahead and put it right there in the chat. Although you're welcome to comment if you want to get last-minute comments. There you go. That's the Trail of Bits, which is a strange research company name, but that's the name of the company. They did a research paper for DARPA. I think this Nakamoto coefficient thing is really kind of fascinating because, you know, they're totally breaking it down by the number of parties you would have to compromise, or the total number of validators based on who are the biggest parties in order to subdue the entire network. So I think that's really kind of fascinating. Maybe I'll go in a little bit deeper into this and next time I'm doing a little bit of reading on air, but I think that actually it's very cool. The DARPA paper basically challenges how centralized, you know, challenges our assumptions about how decentralized Web3 really is, or how decentralized blockchain really is. Anything, I mean, of course, decentralization is not the universal panacea that we would all like to see it be. As Jordan Belfort recently said in my column last week, you know, decentralization does not make everything run better. In fact, sometimes it's actually kind of a bad thing. But in terms of security, generally, it is a good thing. It's good to know from this other point of view how secure your network is. The idea that you can subvert 4 parties and take over Bitcoin, for example, is, you know, it's a bit scary. There's a lot of defense out there, but there's a lot of money riding on it. And of course, in our industry, you know, a small screw up is really not permissible. It causes people to lose faith. You know, if you know, show me a sign if y'all want. Drop in comments. I'll take a couple more minutes and show you some of the key findings from this paper. If we want to take a couple more times to do it, I'll just kind of flash through these a little bit. Blockchain immutability cannot be broken. It can be broken by exploiting cryptographic vulnerabilities, not by exploiting cryptographic vulnerabilities, but instead by subverting the properties of a blockchain's implementations, networking, and consensus protocols. So in other words, anything, you know, it isn't just about the immutability of the blockchain itself. It's about all the decision-making process that goes into it and the humans behind it. When the encryption is used within cryptocurrencies is for all intents and purposes secure. Well, while the encryption is secure, it does not guarantee security as touted by proponents. A Bitcoin traffic is unencrypted. Any third party in the network route between nodes can observe and choose to drop any messages they wish. Tor is now the largest network provider. About 55% of Bitcoin nodes were addressable only via Tor. A malicious Tor exit node can modify or drop traffic. So that's true. I mean, kind of the same way I was talking about essentially attacks on Bored Apes in effect being a streaming platform. That we kind of got a similar situation here where, you know, Tor is kind of sitting out there as a vulnerable thing. More than 1 in 5 Bitcoin nodes are running on an old version of the Bitcoin Core client and which is known to be vulnerable. Well, that's interesting to know. I mean, and as per our guest point, when Hacken was on just a second ago, when Dyma was speaking with us, you know, it's true that who is, you know, doing the audits on this code? Dyma suggested that we should be self-regulated. But at this point, if we were going to regulate things on that level, wouldn't we be a little bit closer by now? I don't know. I mean, one way or the other, we need a standard. We need to be able to hold to it. We've got people who are not even working with updated versions of the Bitcoin Core client. The number of entities sufficient to disrupt the blockchain is relatively low. 4 for Bitcoin, 2 for Ethereum, and less than a dozen for most proof-of-stake networks. When nodes have an out-of-date or incorrect view of the network, this lowers the percentage of the hash rate necessary to execute a standard 51% attack. During the first half of 2021, the actual cost of a 51% attack on Bitcoin was closer to 49% of the hash rate, and this can be lowered substantially through network delays. For a blockchain to be optimally distributed, there must be a so-called Sybil cost. There is currently no known way to implement Sybil costs into a permissionless blockchain like Bitcoin and Ethereum without employing a centralized, trusted third party. Until a mechanism for enforcing the Sybil costs without TTP is discovered, it will be almost impossible for permissionless blockchains to achieve satisfactory decentralization. It's a good read. It doesn't. I think maybe you have to provide an email in order to download it, but definitely you should check it out, and definitely check out Hacken as well. I'm going to keep revisiting security. It might seem a little bit tone deaf compared to the major bombs that are exploding all around us. The metaphorical market-based bombs for those in the NFT space, for those in the crypto space. I hear they're trying to bring Terra back to life. I find that very interesting, of course. But to me, it's all part of the moving forward process. In order to get away from this bear market, it's reflective of many things, and some of its global instability as well. Not that I'm a financial expert, and this is not financial advice. Just going to throw that in there. Also, like and subscribe, since I'm saying the things I'm supposed to say. In the meantime, it does go to show that in order to make people more comfortable, it isn't just die-hard Bitcoin maximalists or other crypto fans in there who drove that bull run. It was driven by the rank and file. It was driven by the masses as well. We aren't going to satisfy the masses with some sketchy, complicated explanation of how our security is being done or how the projects are being run. Doing audits of the code itself and so forth. We've got to have some clear standards that we apply over and over again, whether they're self-led or, in my opinion, at least here in the U.S., love it or hate it, more likely to come down through some industry trade groups, but also in working with the U.S. federal government. So obviously, it is something that they've been looking to do. And frankly, at this point, I think they'll be doing us a favor, hopefully before 2024, because that's the next time that the Fed is looking at lowering interest rates. It's an election year. It's another time of the great halvening for Bitcoin. So, I want us to have good luck before then. And in order to have good markets, to have the line going up, that's what everybody's hoping for, right? I want to bring all the joy back into all of your lives. Here, I'll go ahead and take this thing off the screen so I'm no longer talking about it. I want everyone to be able to have good days based on these market movements. And in order to do that, we need to get our shit together. And that's why I keep coming back to talking about scams, security, and regulation. Not the sexiest topics, but they are really important to continuing to advance the industry. In the meantime, hey, you stuck through to the end with me here. I went into a little overtime a little bit. They didn't give me a redirect anyway, so be it. Why not? But I appreciate you. I appreciate you joining us today. Please do something to take care of yourself. Don't just sit there looking at Twitter, looking at Discord and a whole bunch of charts. We've got to have more in our lives than just crypto after all. So take care of yourselves, and I will see you very soon. We'll see you on Monday at 5 p.m., also Wednesday at 5 p.m. Might have some other additional shows coming up this next week as well. I guess I will announce them as they get locked down. For one thing, I have an interview with Tim Draper on the 6th. So we have that to look forward to. And we will talk to you soon. Remember, everyone, please like and subscribe. It's incredibly helpful to me. And, hey, it makes me feel good. And thank you so much for joining us today. Thanks, everyone. Come back and join us on Monday for Web3 Anarchy. And we will talk to you soon. Peace.